Welcome to this week's Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. Whether we're talking what's been happening geopolitical in the trade, the volatility in the markets, or what every farmer's been talking about, besides harvest, has been the weather. We're going to cover them all during this week's episode, so stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again as we dive into today's whole week's markets, that is. It's had a lot of interesting trade that is happening from outside market influences to internal influences. And I'm excited to have Sue Martin joining us and Mike Zuzolo both. And wanted to kind of start out talking, what was your one takeaway? What was the one thing this entire trading week that caught your attention in the role that you have? And Sue, I'll start with you.
Well, I think the thing is the European weather model is pushing the rains ahead. Originally, we thought it was going to be next Tuesday the rains would start. Then they pushed it out to the 11th, and now they're bringing it back to next Tuesday. And we're thinking that they're talking rains of 1 to 2 inches, even for Argentina. But central Brazil, and then, of course, on into northern Brazil, is expected to have some of the best first rains that they've had in a very long time. And so, it comes down to there are some services out there that are saying, El Nino's already forming out in the ocean and it's here, and this is going to cause Brazil and to have better rainfall and what have you. And our take is that we don't totally agree with that. We think that the El Nino has not basically formed yet, and could be December, January is what we've been hearing all along from our services. So we think that the weather in Brazil may disappoint when we get into November and we look back.
Mike, what about for you?
I guess I feel like after this past week, Susan, especially since the technicals held up in the wheat and the corn, we did make some new weekly lows in the soybeans, that the commodity markets got premium put back into them that I don't think probably should have been let out of them in the first place. I say that from a standpoint that we had the Federal Reserve monetary policy shift a week or two ago. We had the Chinese stimulus come in really strong this week, and the Hong Kong market's up almost 40% off of its August lows at this point. We had the grain stocks report, and it really showed that not only were farmers selling well, their 23 bushels, but that corn number was lower. Why? Because USDA had cut that old crop corn carryover 200 plus million bushels since July on stronger demand. So that had to be worked into the September number. We also had the Middle East come back around, and the crude oil market hitting, almost 1 year lows before this week. And it just seemed like to me, we finally got back to where we should have been. A little bit more respect is in this market now, I think. And I really want to think, and next week will be a key determining factor, I really want to think commodity index buying started properly this current week. And I say that because we really got the demand back on the export sales. We saw that 66 million bushel corn sale. We saw that beef export sales, 68% over the 4-week average. We don't have to worry about the port strike. And so I really feel like commodity index buying might continue at this point, and we may just be on a building block type mindset at this stage of the game, depending on what, like Sue was talking about with South American weather, and then at the end of the week, the WASDE report. So those are the kind of the two big bookends that I'll be watching. But I really like the fact that the trade was given kind of the respect that it should have to begin with.
So let's talk about that, because I think wherever any farmer gathers, they're talking about the weather. I know many areas of the Midwest going to deal with red flag warnings this weekend. That's a big concern for this soybean crop. What are we seeing when it comes to weather in the U.S. and then globally? How do either one of you see that weighing in on the trade? And Sue, I'll start with you.
Well, I think the weather, of course, we've had it involved in our bean market, and of course, subtly then on into the corn. But I think the beans have been responding to the hot, dry weather in center and northern Brazil. But I also believe that, when we look at the weather for wheat and we're looking at Russia, and of course their crop continues to be downsized. They've stopped the imports or banned the imports from Kazakhstan for wheat. And so I think that, and Egypt's been a big player in our market for wheat as well. And now there's talk they're going to come in for corn flour and sorghum. And so in place of trying to buy more wheat. But I think Egypt's building reserves. And that's been one of my contentions all along since February of 21, that we would see countries move back to where they would hold reserves. China, same thing. And I think that this forms a demand market underneath. Does it give a bull market next year? I don't think so. But for now, it's about the weather and then much better demand that we've been catching on the corn. And of course, subtly in the global market on wheat. So wheat prices in Russia have been propped up to about 230, 229 per metric ton, freight on board. So I kind of have to think that we're looking at a market here. We've pushed a lot of friendly fundamentals into the market. Are we done now? I think technically the markets have pushed pretty hard. I think we're going to break into next Monday, Tuesday. Then we'll see if we can't catch a little bit of a bounce. Wheat tends to rally into about the 24th, 26th of October. And then we'll see, can this market hold or not? I wouldn't be surprised but what corn turns around. We had a good harvest weekend looking at us today on Friday. And so, it's natural we would catch hedge pressure today for corn and beans, I think.
Mike, you and I've had this conversation a couple times this week about this wheat market trying to be the leader, which we saw early in the week. But as the week went on, it just kind of fell off and took the corn with it.
Yeah, and I think that makes a lot of sense from a weather standpoint. Sue was talking about Argentina and how it was looking better over the next 10 days for potential rain. And that's going to help the wheat more than anything at this stage of the game. In the trades mindset. And so I do feel like that the wheat market had a lot more weather negativity to it on Friday. I think the other thing that came in too, Susan, was the port strike ended. The dollar went sharply lower, but then we had the jobs report and the dollar reversed. It actually is going to close up higher on the week. And I think that really did a job on the crude oil market, did a job on the copper market and the wheat market, in that no new buyers really wanted to jump in. I would say the biggest potential shock or something out there that I'm looking at, because we've talked a lot about the weather, is the idea that Iran's supreme leader has come out Friday and said that he does not see Israel being around much longer. And that was reported on several different news sites. That's a very nasty threat and not very veiled at all. So I think the crude oil market could be a continuing supportive feature to the wheat and to the rest of the commodities. That's not odd to see that historically when we see an inflationary play, we see a crude oil move, we see the rest of the commodities try and tend to follow. This goes back to the commodity index mindset. And I really like what Sue said about the technicals. Those technicals are really key right now in my mind, just like hers, because if the commodity indexes are buying, they need the technicals on their side for the most part.
With you being kind of in the heart of wheat growing area, Mike, how bad is it right now? We keep hearing about it dry and guys not getting out there to get this wheat seeded because it's just dust.
It is bad, and that it's not gotten to a level where it's make or break because we're still shelling corn. But I think in 2 weeks, that's kind of the dam break for both center west Brazil in my mind, and also our hard red wheat belt and even the soft red wheat belt. They got a little rain in Illinois today that might get into Indiana, but it's starting to dry out across the whole wheat belt right now for hard red and soft red. So I think pretty much all roads lead to the wheat being the leader, even if you're talking about the weather side of the equation. And I think that's where it's really supportive that the wheat market was able to do what it did this past week. So I'm hoping this is kind of a base.
Sue, we saw China come in to buy corn on Friday. There was an unknown of soybeans, which many speculate who that could be. Is their appetite going to start picking up with a little bit of stimulus money being worked in? also while watching the struggles that are happening in South America?
Well, I think that China is going to be coming in for more. I thought it was positive that we came out with 116,000 metric tons of beans, and I think 198,000 or something like that for corn, to unknown. I think that when I see the demand hitting, I think that China has built a lot new reserves facilities this year, and they're still in the process. That tells me they're going to be in the market. They're building more increased reserves than what they had. And I think that when you're looking at the Middle East situation, and that's propping up crude oil, that's very supportive to corn and also sugar, ultimately, because they're both viewed now as energies. But I think that when we look at food, it's going to be very critical. Overall, if I could smooth out a line, I would say we're going to rally to better prices into early January, and then we'll see what we're made of after we turn the year over. But if this weather for Brazil, if it's doing what I think, and we say we get into November and we look back and say, well, that monsoonal season that started in October wasn't as good as we thought it would be, that could help then turn and prop us up into the turn of the year. But by then, La Nina starts to kick in, because I think what is happening is we're in more of a transition from El Nino, maybe to La Nina, but La Nina has not formed. So therefore, that pushes us more as we roll the year over. Well, that's when we're going to start to see all of a sudden that the Brazil crop does come in our face, and we have a much better potential for them to, but they'll be later harvested if what I'm saying comes true.
And Mike, as we wrap up this, because our time went by way too fast, stimulus money with China, appetite's going to increase. Are we going to see folks saying, hey, I want to get some more of that U.S. beef and U.S. pork brought in?
I hope so. I hope they do another stimulus package. There was talk of that at the end of the week, but right now the trade's not real eager to put their money on China yet. They will in their financial markets, but very few that I've talked to think that the consumer is really going to change much with what they've done so far. So that makes the currencies that much more important, Susan.
Well, I appreciate both of you guys taking time to talk to us. Mike Zuzolo joined us with Global Commodity Analytics, and Sue Martin with Ag and Investment. Quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's the Nebraska Soybean Board Weekly Market Roundup.